What's going on, guys? Going to do a second trade recap on NVDA. This stock was in, let me see, was this in the free call outs here? Let me take a look. This actually came off of the paid gold members watch list from last night. So I had two areas of opportunity here on NVIDIA. First area of opportunity was going to be 218.75. That was for a scalp opportunity. As soon as it broke the pivot of 218.75, we were going to get long, take profits, obviously, into the next area of supply or into strength. And then the big pivot, the main pivot for today was 219.50, 219.46. So let's just call it 219.50 for the sake of the video. I'm going to, again, show you guys, just like I showed you guys on coin, how that trade would have broken down. Okay, if you are a member to Evolution Traders, you know how we can enter into the stock in the candle that breaks the pivot and where our stop would be. So I'm not going to speak to those people. I'm going to speak to the people who are not a member of Evolution Traders, who don't know or understand my trading strategy fully. So what we're going to do is take the pivot of 219.46, 219.50, okay, and we're going to wait for confirmation of that price, and that is going to be our entry price. So with that being said, 219.46, you can see here at 6 a.m., did we not get that break? Yes, we got that break of 219.50. This is not going to be rocket science, guys. This is going to be very, very repetitive, but the more you see it, okay, the more I recap these plays, the more I recap these trades, the more it'll start to make sense and the more confidence that you will get taking these plays. Okay, this is not rocket science, guys. If it works in your favor, great. If it doesn't, you cut your loss and you move on to the next setup that does. We keep our losses small and we let our runners run. It doesn't get any simpler than that. The pivot here, I'm going to take this off because this is for scalpers. Let's remove that. 219.46. We got the break here on the 6 a.m. candle. Again, we are using the 1 hour candle, the 1 hour time frame here. We got this break. We put in a top high here at 220.54. So what I am going to do here, okay, what I am going to do here is put in a new trend line at 220.54. What we would be waiting for is the following hour's candle to take out that high price. Now, there is a riskier entry. That entry would be at the close. The close would be 219.95. With this entry, we would be scraping off an additional 60 cents per share on this play, okay? If we go the safer route for added confirmation, the entry price would have been 220.54. Excuse me, as it breaks 220.54 would be our area to get long in the stock. Okay, and we are looking for 2 to 3 pushes higher on the hourly time frame. What does that mean, 2 to 3 pushes higher? We are looking for, as long as we are not stopped out, okay, we are looking for 2 to 3 candles after our entry to begin to take profits. Okay, the farther we get away from the moving averages, the more we need to take profits. Okay, we don't want to be buying a stock way up here and the moving averages are all way down here, if that makes sense. The moving averages are going to act as support, it's going to act as glue, it's going to act as a foundation. Way up here, you just think about a balloon with a lot of helium in it. Okay, as soon as you fill up that balloon with a lot of helium and you let go, that balloon begins to float higher and higher and higher and higher and higher. Over time, after it gets to a certain point, after that helium starts to dissipate and wear away, the stock begins to fall down, fall down, fall down. Now, where does that balloon fall to? It falls down to the area of support. In the case of the balloon, the area of support would be possibly a tree, possibly a mountain, possibly a skyscraper, possibly the ground. It just all depends on where that lands. And if we put that into the stock, we put that into, stock talk, this 5-day moving average could be a tall skyscraper. This 10-day moving average could be a tall tree. This 20-day moving average could be a car. This 50-day moving average could be the floor. Okay. Obviously, anything below the 50-day moving average, we're not looking to buy long. We're looking to buy short. So in this particular situation here, 220.54 is our break. 220.54 is going to be our break. We would get long in this stock, and this stock put in a high of 221.18, put in a high of 221.74, and now we are currently at 9:51 a.m. making another push higher, trying to break this high of day price of 221.80. Okay, 221.80. So if we are looking for 1 to 2 to 3 pushes higher off of our entry, we would be looking to take profits at 221.64, which is about a point move off those highs. Currently, we are working on our second push higher. If we get a break, and in the next 9 minutes, being that the candle is going to close in the next 9 minutes, if we get that break in the next 9 minutes, we could potentially take profits off this close. If we do not cross this high wick price here, we would just stop out here and take our profits here. Why would we do that? Because we didn't take out the high of day, next candle could open up and start to backpedal towards this rising support, okay, and try to find a little bit of support here. So now we don't want to end up breaking even or losing. We're just going to want to stop out. So if we can't get a break of high of day within the next 8 minutes, we're just going to stop out here and take our dollar profit move. NVDA is only a $221 stock. I play options contracts on these. Let's just take a look here. I'm just going to give you guys a little bit of insight. If we play weekly contracts here, because we're day trading, because we're scalping, we can afford to play that short-term expiration, just due to the fact that we don't plan on holding this move into tomorrow, into the next day, into the the following day. So time decays doesn't really affect us, because we're trading on a minute by minute basis and hour by hour basis. Current stock price is 221. If we were to go just inside the money here at 220, that options contract is $400. Okay, so $400. If you do not have $500 in your trading account, you probably should just stop trading at this particular time, to at least invest in yourself and to save up a little bit more money, so you can have $500, $1,000 to at least be able to play these type of stocks. If we look at it from a macro picture here, $400 investment in NVDA to control 100 shares that moved up 1 point off of your entry. The net change on this particular option contract is up $1.63 on the day. So if you would have played that breakout, potentially that $400 investment would be sitting at around $100 to $160 profit at this point in time, in less than an hour, 2 hours. Okay, so where can you go where you can invest $400 of your money and within 30 minutes to an hour immediately be up $100, $150, depending on your entry, depending on how far or deep in the money that you are. So I know that's a very, very basic explanation of the way options and stuff work. This video is not to sit here and explain all the deltas and the theta and the time decay and in the money, out the money, at the money. I'm just giving you a brief oversight here, just pretty much giving you an example that you could have played 220 contracts for $400 and used the pivot point and used the confirmation of that pivot point breakout. Okay, so if the pivot point is 220.54, you could have bought options contracts here. Those contracts could have moved up maybe 50 cents, $1. And if you're controlling 100 shares for, let's say, $400, you could have made $50, $100. And if you look at it from a bigger picture, the thing is that it's not that you just made $50, you just made $100. Guys, you only invested $400. Okay, that's one contract. If you would have bought 5 contracts, then you would have made $250, $300, $400. You see the way that works. So as you get better with the system, you get better with increasing your position sizing, and you start scaling up. Okay, let's just say this trade did not work after the 220.54. What would our entry be? Being that this is going to be our entry candle here, we would have used our entry candle low price, which is the bottom wick here, as our absolute stop. Our absolute stop would have been 219.63. Okay, so we would have risked about 80 to 90 cents on the trade. Options contracts probably would have moved down anywhere from 40 to 60 cents. So not a big loss if you would have lost there. Obviously here you can see we got the break 222. I would be looking to take profits here as we're up about a point and a half off this pivot. I hope that kind of helps.